Hi, welcome. This is Mary Ellen McGonagle with MEM Investment Research. I'm going to begin by talking about the top performing sector that I believe is going to lead us during 2021. I think it's going to be a very interesting year as the U.S. economy continues to recover from this unprecedented pandemic. And while we're beginning to see recovery groups such as financials and oils spring to life, I think that it's a group that led us last year that will continue to be a leader into 2021, and that is the technology sector. We're looking at a daily chart here. A lot of that has to do with a continued migration among corporations to cloud technology, as well as 5G getting rolled out nationally, as the need for faster speeds among distance workers and students is going to remain in place for most of 2021. In fact, Facebook and Google are not anticipating opening their offices until September at the earliest. Let's move on and take a look at the emerging markets relative to the U.S. markets. We're going to take a quick look at a chart with the U.S. dollar in yellow relative to the index for emerging markets, and we can see the correlation as the U.S. dollar weakens. These emerging markets do outperform, and there is an anticipation that the dollar will continue to weaken well into 2021, which is of course bullish for a continuation uptrend among these emerging markets. However, there is and are going to be speed bumps among these emerging markets as the vaccine is not anticipated to be rolled out until 2022, primarily because of distribution, a lack of distribution, as well as cooling processes that are needed to keep these vaccines relevant. So I do believe that among the broader market indices, we can see the NASDAQ here going into March to December being an outperformer, and here are the emerging markets. I do think that we will see a continued outperformance among U.S. companies, and in particular the NASDAQ. Let's move on and take a look at some of the market caps within the markets and see which area from my work I believe will outperform this year. We're looking at the NASDAQ, the Russell 2000 small cap index, which is in blue, and then the S&P 500 down here in green. And this is a period from 2003 to 2015, and we can see that small caps do have a very strong history of outperforming the broader markets. And if we move to a more current picture, we'll see that this blue NASDAQ has relatively underperformed going back since 2014 into January of this year. I think it is now time for small caps to shine. They do relatively outperform during periods of economic recovery. And then also when you look at the breakdown among small caps, 13% are financials, 16% are industrials, and these are recovery areas of the markets. Let's go ahead and take a look at the stock that I think is going to be a top performer for 2021, and that stock is Crowdstrike. We can take a look at a daily chart of Crowdstrike, and this company is a cloud-based software security company that provides protection against unwanted cyber attacks. We're looking at a daily chart here. We can see that the stock gapped up here in response to 253% year over year earnings growth. Revenues were also well above estimates. I'm pointing out when the stock was added to my MEM Edge report prior to this gap up, we've seen a nice 50% advance over the last 6 weeks. But more to the point here is the fact that the earnings outlook is very strong for this endpoint security firm. There's an anticipation that it will continue to grow as corporations put cybersecurity at the top of their budgets for this year. Let's take a look at target prices for the S&P 500, and it is my estimation that the year-end target will land us at around the 42.82 range. That's about a 12% gain from current levels. A lot of that has to do with historical precedents as far as the performance in the first year of a newly elected president, as well as in a market that's in a recovery phase and looking at the markets coming out of a recession. Next up is taking a look at gold prices, and I do believe that gold prices are going to end the year higher. We did have this knee-jerk pullback in gold after the runoff elections, gave the markets a sense of stability. However, many of the elements that pushed gold much higher in 2020 remain in place, and a lot of that is the weakness continuing in the US dollar. We are going to continue to see uncertainty surrounding the current economic recovery, and gold is of course a safe haven. And then central bank stimulus, which will push interest rates down and in turn make gold a more favorable asset. And that is my outlook for 2021.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.